Hello, everyone, and welcome this afternoon. I'm just allowing a couple of moments to allow our audience to join us. Now, today I have with me Florence Magee, and Florence is a new mentor with the Design and Crafts Council of Ireland. She worked with me previously on an export piece. So if anybody's interested in export, you may remember Florence and Marcus Williams gave a presentation on export a few weeks ago. So Florence has huge experience. I'm delighted to have her here today. And just to let people know about the schedule, that I experienced some illness with speakers, and I'm happy to say that they're all better and will recover. But it has meant a certain amount of moving around. So I will have a full and comprehensive schedule up for everyone in the next 2 to 3 days. And I was just saying to Florence that it's kind of ironic, as she is French, that today's webinar for high-end making and collecting has now moved to the 14 juillet. So that will be the 14th of July. So the French lady has displaced today until the 14th of July. But today we're going to look at getting clarity on your business numbers and goals. And with that, I'm going to welcome Florence. So Florence, it's all yours. Thank you very much.
Thank you, Emer. That's great. And welcome everybody. So today we're going to look at finance, the big subject. And we have only 40 minutes. So I'm going to be going quite fast with some things, but hopefully you'll find a bit of clarity and you'll have a good view of what you need to know and how you can set up systems for yourself. Now, there we are, sorry. Now, my goals for the webinars is for you to understand the main concepts that matter for your business. And in that, I'm talking craft and design businesses, particularly small businesses operating maybe as sole traders, because it is the majority of people. Understanding what numbers you need to figure out for yourself, and which ones really matter. And then looking at setting up simple systems that you can just do your finance on a daily basis. And then we'll at the end look at forecasting for sales and for profit. Right. Just a little bit about me. As Emer said, my name is Florence Magee and I am French. I've been based in Ireland since 1998. I came as a student and I've had many jobs since, but for the past almost 20 years, I've been in the creative industries, 8 of these years being in London. And before that, I actually spent 5 years as a hand weaver, first as an apprentice in County Mayo, and then with my own studio in Dublin. On a background, I have a BA in business management and then an MBA in creative industries management, where I focus really on the business support for creative businesses. So you know a bit more about myself. We're going to look at our agenda for the session. First, we're going to take a bit of time to look at what is finance really in a small micro business, why it is important. Then we'll move on to understanding our business figures, then onto simple systems, and then looking forward to forecasting, goal setting, and planning. Now, there's a lot of things that this webinar, let me put that down, yes, cannot be about because we don't have time, and I'm not an accountant, I'm a business manager. So I'm not going to talk about taxes or VAT, not going to talk about whether you're a sole trader or limited company, not going to talk about loans or financing solutions, not going to talk about your bank balance, your assets, and I'm not going to talk about shares because that would be very unusual. This is not a bookkeeping exercise either, and I'm going to touch on costing and pricing, but I won't go too deep into the pricing element because that could be a session itself. Now, if you're feeling mildly panicked at the idea of finance, you're not the only one. It's such a big subject for everybody. So much that Bank of Ireland is leading with that for their marketing campaign. At the moment, finance is one of these subjects that has a huge amount of fear attached to it, shame and doubt, and it's just a lot of people don't feel confident with finances. It's just I guess how you're raised, or also the school system doesn't help. If you're creative on top of it, you might have a little bit of a block with numbers, maybe not, or it might not be something that you would have had enough training in, or feel confident with. But just want to say that you're not the only one. I was looking at definition for finance, but I couldn't find anything that wouldn't immediately stop everybody from listening. So I decided to make my own definition for the purpose of a small craft and design business. And for me, finance is really how you create, capture, and record the value that you create in your business. If your business is there to create an income for yourself, how do you create it within what you produce? How do you capture it? And how do you record it? Now, why is it important? It's a bit of a silly question, but it's important to actually go over it so that you can fully appreciate the benefits. It's important so that you can have a handle on what you pay yourself and how you pay your taxes, because without that, you cannot sustain your business. It's important so that you can plan to develop your sales, your profit, you know what is going to come in, or at least what your plan is. If you're going to increase your spending, for example, do a trade show or develop a new line, then you can plan for it. If you want to look outside of yourself and maybe start employing or outsourcing production, it's very important as well. Very important also is to avoid the cash flow crunches, those numbers, those months in the red, and we'll spend a bit of time on that. But also it's a great way to have a clear view and a data-based view on opportunities and what they're going to mean for your business numbers, rather than just jump on any opportunities that happens. And finally, very important to get out of scarcity mentality, which might basically this feeling that there's not enough of anything, and that you always have to do with as little as possible, which can be very useful when you're creating, but to looking forward as a creative business, it can be a lot of stress. I'm going to read out the quote for those who don't have their screen. Money stress is no fun. It poisons every aspect of life. That's true for anyone, but if your passion is creativity, then one of the biggest dangers is that worrying about money will kill your creativity. As a creative, your headspace is your workspace. This is from Mark McGuinness. He's a business coach based in the UK. He's a poet as well. If you feel you have mindset issues with finance, it's a good one to look at, because he really has a very compassionate and creative way of looking at it. Okay, now we're going to go into the thick of it. I have a picture of a cow here, not only because they're lovely, but to remind me to ask you, what type of animal do you create when you create your business? You feed your business a lot of resources, your time, your investment, your money. What does it bring you? And does it bring you enough? And it's really, it's a big question. Looking at your business numbers, it's good to be aware that there's two types of numbers in a business. Some numbers are baked into your business model. That is numbers that are much harder to change, and that pertains to very much the core of your business, how you're doing what you're doing and who you're doing it for. So those numbers are your cost of doing business, your cost of production, what's your maximum capacity, are you limited there or not, and what's your profitability per product. We'll go into that now, because I think it's very important to get clear. And then you have numbers that go up and down with your activity, and that will increase as your activity grows. These are your sales figures, these are your production figures, and these are your profit. And provided your first figures are fine, then all you need to do is to focus on marketing and sales, and then just increase your profits. Sorry. Okay, so looking at those first set of figures, those business model figures, what do you need to figure out? First, you need to figure out how much it costs to run the business. Just turning on the light, how much it costs to run the business without producing anything. Second thing, how much it costs to produce each product and to sell. Third thing, how much each sale contributes to your profit. And then finally, at which level of sales do you actually break even and then start paying yourself properly? Big questions. Okay, I'm going to run through the costings a bit fast because you can just Google and get them, But your fixed costs basically are all the costs that happen without any production or sales. So all the things that you're going to have to pay anyway, well, it's different for every business, whether you have a studio or employees, whatever you pay, but this is for the business. So you can have full list on the internet, no problem. So you need to know for yourself, you need to actually go through your bills and have a figure. And then we move on to the variable costs. So these are per unit of production, how much raw material goes into it, how much consumables, how long it takes to make, the packaging that goes into it, and then anything that has to do with distribution, and then the payment fees that are not added to the price when you sell to the client. For the purpose of this webinar, I'm not going to worry too much whether your client is trade or direct, because in a way it will increase on your profit, but it shouldn't matter too much in how you set up your numbers. We'll talk about it a little, but not too much. Okay, now the big question for most craft and design businesses that have a huge amount of handmade in their product is how to account for the time, because the level of labor in each product might be quite high. So there's not one way of doing it. The amount of time that you put in a piece should impact on your prices. So you should know how much time you spend on each piece, and giving yourself a reasonable per hour, how much that gives you for your cost price. If you're a sole trader, at the end, actually, it won't really make a difference in terms of how much you end up earning, because you will pay your taxes, your revenue on all your sales minus all your expenditures, and you won't have invoiced yourself in a way. So whether it shows up in terms of profit or is baked into the price, it will come up at the end. But the price needs to recognize that. If you have a limited company, you will decide how much you pay yourself, which might include your making hours as well as your hours as a business manager. But it's always quite a question, because some products can be very heavy in terms of labor. At any rate, your price should include your variable costs, so the cost of production per unit, plus a contribution to the fixed cost and the profit. And that level of contribution will determine your price. And it is quite an art to find that right level. Your final price will really depend on a lot of things. Depend on whether you have a volume-based production or a production of very few items per year. It will depend, of course, on the costings for the product, the direct cost for the business, and the fixed cost for the business and the direct cost of each product. But it will depend on a few marketing things as well. So whether you decide to sell to trade or directly to the consumer, what is a reasonable price? At the end, your recommended retail price and the price that the buyer from the shop needs to have, where you set yourself in the market, at which end or which part of the market, and then maybe over your range of products, some items might carry more of a contribution than others. Now we'll go back over that at the end, because I have a little exercise that just ties everything together. So if you're starting to, just feel there's too much, we'll go through the figures at the end. And I'm not going to touch figures until the very end. Okay, and then I want to mention what's a break-even point and sustainability. So I apologize for what you're about to see because I actually have graphs. It is quite important to know what your break-even point is and at which point you actually start running a sustainable business. It's important because you're going to set yourself some goals, some production goals, some sales goals, some profit goals for yourself, and you need to know at which level this starts getting actually getting good for you. So what do I mean when I mean a break-even point? The break-even point, and sorry about the graph, the break-even point is when your sales reach the level of your total cost. So that's break-even point here. These are your fixed cost, which is your total cost, which is the fixed cost plus the cost per product. We now reach, the sales have reached that level, and now we enter that profit zone. And that's when you start making your profit. Okay, so that's called just a break-even analysis. We actually have an example at the end, and you'll see it's actually quite easy to do with one product. It gets a bit more complicated when you have a range. Now, my final question for this this part of the training is your business set up to afford you as a professional, as a maker? And it's quite difficult to answer. It's nobody is in the craft and design business to make a mint. It's for a number of reasons. It's the profits tend to stay quite low, but I want to talk about production ceilings and the effect it can have on your sustainability. Again, apologies about the graph, but bear with me. Okay, so we have our break-even point there, and we enter our profit zone. What can happen is that the business has a maximum production, particularly if your products are handmade. There's only so much you're going to do during the year. And even if you have them at sourced, you're only going to be able to process so many sales. If that maximum production is between the break-even point and then the point at which your sales gives you your desired income, you will be capped in your income and you will make some profit, but not pay yourself enough to continue. And that is, it's just something to bear in mind. That's an issue that can happen. Okay, so now we talked, we talked philosophy, we talked big numbers, how your business is set up for profit. Now we're going to be very prosaic on a daily, setting up your financial systems. Now, systems are like the gym. Having a membership is great, but it's actually doing them, going, that will make the difference. Even if you work on your own, you need systems. You need systems for your finances to reduce the time you spend worrying about finance, chasing invoices, preparing invoices, or doing your taxes at the end of the year. You need to increase your confidence and the control you have over your numbers to look forward, but also to reduce your stress and your waste of time, which is your most finite resource, really. A good set of systems will allow you to look at trends in your sales and be able to forecast better, but also to see those cash flow red crunches, I call them cash flow crunches, those months that you're going to be in the red, and just act on it. Then we talked about comparing the performance with previous year, but also seeing whether you're on track or not to achieve your goals, and then to plan for paying yourself, for putting aside for your taxes, for paying your pension, for your investments to grow. Okay, so looking at what type of systems your business may have. First, you need a system to send and to receive money. That sounds silly, but not everybody is perfectly okay on it. And I'll have an example of this. You need a bookkeeping system. So a system that just records the money that's owed to you and the money that's supposed to come in, and that flags out when the money is due but hasn't been paid. Then a system to ensure compliance, that you keep your records properly, that you file your taxes at the right time, and if you're VAT registered, that you file your VAT register, VAT return in time. If you have employees, obviously the obligations are much larger. And then finally, a system to attribute and distribute the surplus that your business is producing, the profit, making sure that you put enough for your tax bill at the end of the year, that you pay yourself regularly if you can, and that you put money aside for investments, for profit. This pot of profit for maybe buying new tools for next year, or taking part in a trade show, or any forward-thinking investment. Okay, so systems to receive and send money. So it sounds a bit silly, but I know it's not the case for everybody, because I talk to people, but having a dedicated business banking account with a card, and that's linked to a PayPal, is really a must. It will save you so much time, rather than having to pick through your personal bank statements, which ones were for your business, which one was for the house. You need something that's dedicated and that can just work on its own, and you just need to do a run of the figures regularly. You need to have a way to send payments, and you need to have agreed payment terms if you work with trade. So that can be that the money is due when the goods arrive, or you might want to give a 30 days credit, or the buyers might tell you what the payment terms are. But it's good to know for yourself, because it will impact on your cash flow. And then finally, you need an invoicing and a receipt system that just, basically writing down your invoices, being able to give a receipt to people. It could be just on Word. It doesn't have to be very complicated, but nowadays there are so many bookkeeping and invoicing systems that give you, full control over your finances, that you should be able to find something that really fits your needs. So these are accounting systems for small businesses. You might want to keep a record on Excel. That's absolutely fine. To be honest, I do that. Or you might want to use one of these packages like Xero, Wave, Accounting, QuickBook, or for larger companies, Sage, that really link your invoicing system with your bank account and your reporting, where you can just straight away get a good picture of what's coming in, what's going out. But none of these systems will completely do the work for you. They'll make it easier, but they do need to be managed. They do need to be reconciled every so often, because they're not intelligent. Unless you tell them what the payment is for, they won't know. Until you tell them what the expense was for, they won't know themselves. Okay, and then finally, a system to actually distribute all the lovely profit that your business is making. So if you are a limited company or partnership, you will have had your salaries taken out already. But if you're a sole trader, at which point do you decide to pay yourself? And do you pay yourself on a monthly basis or a quarterly basis? Do you wait until you know how much is in the bank, or do you have direct debits going out? Same thing, how do you put aside for your tax liability throughout the year so that you don't have a massive bill to pay? And then do you start portioning off for your pension, for the reserve that your business needs to have so that it's not so liable to financial shocks, and for profit, for reinvesting in the business or in yourself? Okay, so looking at a little financial routine, that is literally just a suggestion, but a routine needs to happen. So I would suggest just making a calendar date with yourself, sending yourself an invite, and then sitting down and doing it at a set time every week or every 2 weeks, so that it just becomes part of the routine and you're on top of it. Things get out of hand if they only happen once in a blue moon. So on a weekly or bi-weekly basis, record the sales, the expenses, either on your Excel or system, or on your bookkeeping system. You'll need to reconcile the spend on these systems on at least a monthly basis, not bi-weekly. So telling the system what income expenditure relates to what part of the business. Then you'll want to start have a set date to send your invoices and chase invoices, so that once every 2 weeks that's when you send your invoices, and you just get on top of who hasn't paid if you sell with invoices. And then do your distribution on a monthly basis, or again on bi-weekly basis. On a quarterly basis, you want to review your sales performance, see how you are getting on, maybe do the VAT return. And then annually, then it's time to do your tax return, set your goals, and maybe go over those costings. So how much you spent on materials, on everything over the year, and review your prices. Are they still relevant? Maybe it's not every year you do that, maybe it's every 2 years, but just to make sure that your prices actually reflect what needs to happen for your business. Okay. Great. So now we're going to look forward. When you look at your financial statements, maybe you have an accountant, maybe you do your taxes yourself, they will tell you what happened the year previous. Now we're going to look forward. And for that, I want to just start looking at the words we use, a quick glossary. So your budget is going to tell you what money is to be spent on whatever project, and we'll estimate revenues. To forecast what the budget might look at, you need data. So your predictions, a forecast is a prediction, but it needs to be based on specific data. So either the sales from last year, or if you haven't traded last year, what you think is possible. And also what happened outside of the business. For example, we had a global pandemic on how did that affect business? How is it likely to affect, let's say, the Christmas season or whatever. Now, moving on to planning. Planning is really that process of going through everything that you want to happen to achieve a desired goal. And that leads me to goal setting. And goal setting is a big thing, and it's probably something that's not done enough when one is working on one's own or in a very small organization. Establishing specific, measurable, and time-targeted objectives at the start of the year, or maybe reviewing them after a few months. So what are your SMART goals? And if you haven't heard of SMART goals, please, they're very good. I love to hate them because they really push you in the corner to actually make these specific goals for yourself. So a SMART goal might be, I want to increase my retailers by 3 in the Western region before next July, with a maximum of or minimum of 500 euros per retailer as in the first year as orders, something like that. Something that is specific, and it will take a lot of work to actually get those SMART goals to to fit your business and to be realistic. Now, when you're going to look at those goals, just a few considerations, because it can be just, you don't want to pluck numbers out of the sky and just say, yeah, I'm going to triple my revenues. First, think, are you limited by your sales or by your production? If you have a very handmade production that is limited by how much you can produce, then you will have a figure of what is the maximum production capacity. if you have sales capacity issues, what are those limitations, you know? But there are ways of knowing, you know, whether you're talking in tens or in hundreds or tens of thousands. It's different for every business. Then you'll need to know what assumptions you base your projections on. Those assumptions could be last year, could be an increase on last year, could be you know, looking at, it's hard to get competitive data in our industry, but those assumptions, when you're going to say, okay, we're going to do 10% up on last year with retailers, and we're going to increase 20% for direct sales, you need to write them down with your budget. It's no good if it's not written down, because it is assumptions. You know, it is deciding this is what's going to happen. The reality is never going to fit, but you're making a model. Then you need to know how seasonality influences your sales. Again, every business is different. It will depend on your product. It will depend whether you sell to trade or directly, but you will be able to know, you know, what are your low months, what are your high months. Do you make most of your sales in the last 3 months of the year, if you're into the gifting industry? And then finally, what will be the expenses that are attached to those goals? Because every sales goal has an expense that's attached to it. You're going to maybe increase your marketing or the spend on, let's say, social media. You're maybe going to do a trade show, or you're going to have to maybe hire somebody to help you. What is the expense attached to it? Okay, so there's many areas that you can budget for. You can budget for your purchases of raw material, for your production, for your sales volume, your profit, and then your cash flow, so that you know which months are danger. So just for the fun, we're going to do them all right now. And that will bring us to the end of the session. So we'll have questions afterwards if you need to ask questions. I'm aware there's a lot of subjects there, but I hope that this example will actually bring it together in a quite a concrete fashion. So we're going to take the example of a weaver. He's making scarves. He has a studio, and that's 6,000 a year for fixed cost in total. Okay, he's a fast weaver when he gets going, so he can do up to 100 scarves a month. He's preparing for the Christmas period, so we're only going to look at the last 6 months of the year, July to December, and he's only selling to customers because I need to simplify, and it's much easier. Okay, we're going to look at the production budget. So what he's going to spend to actually create his product. My budget assumptions are that the raw materials cost 10 euros per unit per scarf, and the direct cost to produce the scarf are 10 euros. I have not included the labor hours in it, just to show you what it does on the profits at the end. So when we start charting it over the course of the 6 months, we can see that he spends 3,000 in the first month getting materials, and then 1,000 a month producing. At the end of the period, he will have spent 6,000 on his production. Now we're going to look at the sales. I've decided to give those scarves a sales price of 100 euros. The formula for that is that I took our 20 euros per unit and multiplied it by 2, and then so for, let's say, a trade price, if you were selling trade, and then multiplied it by 2.5, 2.5, which would be a general retail margin, except that scarves are accessories, so it would be 2.8, but it was too easy to have scarves at 100 euros each. So our weaver has made 300 scarves, and I've decided that he's going to sell 80% of the stock over the period. Because selling all the stock would be quite amazing. So we have 20 scarves sold in September, going up to 40 scarves, and then ramping up to 100 scarves in November and 80 scarves in December. At the end of the period, he sold 240 scarves at 100 each. That's 24,000 scarves, 24,000 euros. Okay, if we bring it all together, we're gonna see what's the loss and profit each month. So the first month, it's all loss because he has production cost and fixed costs. So our fixed cost is 500 a month. The second month, same thing. And then we start getting in month of profit in September when it starts selling, and then ramping up nicely to a final profit of 15,000 over the period. Okay, so you can say, God, he's done 15,000. That's great going, isn't it? There's no problem, except that when you look at the cash flow, that person was in the red for 4 months of the 6th month. And while he has a nice little figure in his bank account at the end of December, he was in the red for 4 months, and his bank might have an issue for that. So it is good to forecast those expenses against the sales so that you know when you're going to be in the red. And what could he have done to ease off those months where the sales aren't coming in, but the expenses are going out? So he could have made sure to have cash reserves. Obviously, I pretended that he had nothing in the bank account to start with, so it's a bit, but having cash reserves there to make sure to pay for them, spreading the spend of the raw material or of the production throughout more months so that it's less of a weight on the finances. You could have negotiated payment terms with the supplier for the 3,000, maybe paid in 2 goes, or negotiated an overdraft with his bank saying, listen, I know I'm going to sell at Christmas, I'm going to be in the red for 3 months. Can we negotiate an overdraft? Or as a last resort, because I personally don't like taking loans, but what is a possibility is to take a short-term loan to tie yourself over until the Christmas period. A lot of businesses do that. It's true as craft and design businesses, we don't tend to go for financing solutions. Okay, we have a couple of more minutes and I'm going to finish with a break-even analysis on that example. So I first want to calculate the contribution. We said our scarf price is 100 euros, direct production cost 20 euros. So each scarf is bringing 80 euros of contribution to the pot of fixed cost and profit. Okay? To calculate your break-even, you need to divide your fixed cost, which is 3,000 for the period, by the contribution per product. So 3,000 divided by 80, that gives us 38. So after 38 scarves sold, is now in the green and is starting making a profit. So that's good. Now, he sold 240 scarves and he made 15,000 at the end. If he might decide that it's not enough because it's the bulk of his activity for the year, he wants to earn at least, he would have had to earn at least 20,000. So how do we calculate that sustainability point of 20,000? We'll just need to add what our fixed figures are. So our target income, 20,000, plus our fixed cost of 3,000. That gives us 23,000 divided by your 80 euros of contribution per scarf. And that gives us 288 scarves. So to make 20,000, you would have had to sell 288 scarves, which would be like 90% of his stock. Okay, so that is a very quick example of how these figures can stack up together. To recap, because I'm sure you have questions, we looked at what I call the financial management plan, but really the finances that run through your business. First, we looked at how to understand how your business functions, how it is set up to give you profit, what are the figures that are the costs that are attributed to your business, to each product, and how it stacks up to break even and then to make sustainable income for you. Then we looked at how to set up systems to process, record, and attribute the financial flux and the profits. And then finally, we looked at forecasting and planning and what are the assumptions that you need to look at when you're forecasting and the benefits of forecasting to avoid dips in finances. That's it.
Florence, thank you so much. I'm going to say a couple of things to you. First of all, you didn't lose any of your audience.
Thank you. I'm very.
It was incredibly clear, incredibly useful. And I think what made it really genuine was the fact that you yourself have such a passion for craft and, you know, you come from a weaving background yourself. Yeah. And we do have a great compliment in here. Everybody wants the presentation. So I have been instructed, and I'm going to take this on board by Dan, who's really on the ball with these things. Florence is definitely helping many crafters with this session, and he has told me to get it up online, and I will this evening as soon as possible. And it's exactly what people need in these difficult and confusing times. And it was a lesson, fantastic. Thank you. That was great. Thank you. One of the most useful and clear presentations on finance I've ever seen. Thank you so much, Florence. And I definitely agree with them. And testament to that is that we lost no one. So we've got the balance. There's somebody else saying, thank you, it was brilliant. So Florence is going to do a series over the next couple of months with us. So I'm delighted that they're hitting exactly the right tone. Now, I have a question for you, Florence.
Yes.
And it's this. You were saying that really we should revisit pricing every 2 years in the ideal world. Something I come across with craftspeople quite a lot is they have brought their product to market and they have underpriced it.
Yeah.
So at what juncture can you actually readdress that, or do you have to be introducing a slightly different range? Or
the price, it is difficult when you have buyers and you have relationships with retailers, or you're selling it yourself. I guess you have to be a bit crafty if you're gonna bring your prices to something that is more sustainable. It might be a case that a slight rebranding is needed to actually package in a way the increased price. Maybe looking at which features add really to the value of the product, and which features might be skipped on a little bit or are not so intrinsic to the value of the item. It is always harder to raise prices, but everything is going up. Your utilities, things are going up. So there is definitely a case for revisiting. But I guess it depends on the range of the variation of price. Can you have a conversation with the buyer and say, listen, for sustainability, they need to go up 10%, and they know that the clients are there and like the products, and there's a flexibility for a bit of an increase? Or do you need to have a hard look and maybe curl some of the products that are just simply not sustainable, or rework the product so that you spend less time at what's not so material in making it the great product that it is, and then rebrand with it. It's yeah.
Okay, that's good examples and good path forward. It's one that people have in their minds all the time.
Yeah.
Someone has just discovered the Wave accounting system. Have you ever used it, or do you know much about it?
I don't know much about these because I have to be honest, I'm still on Excel and Word. But they're very Wave particularly, I think, allows you, for example, to take pictures of receipts and upload them. And they're using all the technology that is available to to just have those finances. So they're worth investigating. But as I said, none of them are going to do the work of telling you what the expense was for. And you'll need to decide what your categories are so that your fixed costs are in one go, and then per range of product or per type of product. I don't know how you want to categorize, but that's something that needs to happen anyway. But once you have them set up, then you're able to be like an accountant in a way, and just get reports done and really get some very meaty data on those figures. So they're quite exciting. There's a lot of things happening in that department.
But I find it very reassuring. Yeah, I find it very reassuring that you were an advocate of, a spreadsheet. You can start with an Excel spreadsheet, and as long as it's updated.
It updated. I personally sit down every 2 weeks, and I just send the invoices. I send out gentle reminders that this is overdue. It doesn't have to be very long, and you can very simply see, it again. If you're selling cards online, like it depends on the volumes of what you're selling, but that's why your systems need to fit your business. If you're doing a few commissions a year, maybe you don't need to be paying for one of these solutions that will cost you per month. It depends on the business.
Now, when you send out this gentle reminder, how soon afterwards do you send a less gentle reminder?
I do a month, and then another month, and then 2 weeks.
Yeah, and then you appear at the front door, do you? Or
kind of. Well, it's rare, actually.
Very rare. Okay.
Rare, but
okay.
It depends. It depends who you're dealing with, and also retail might have payment terms. For example, if you're working with buyers from retail, each company might have different payment terms. So some might pay on reception, some might pay after 30 days, some might pay after 60 days or 90 days. So it is, it very much depends on the business. But I find that if you're on top of it and you're actually gently reminding people, then you might have one or two, people who are on purpose not paying, but a lot of the time it's just people are so busy, they just, things get missed, and it's not personal. They just, too many wheels turning and they just forget, that's all.
Yes.
Also making sure that it is easy to pay you is very important. So either getting a PayPal link, or one of these, if you're selling on your shop, you'll have it integrated with Stripe and going straight to your account, and Shopify. There's so many solutions now to actually have an integrated system. But the easier it is for people to pay you, the less effort you'll have chasing things. But you can also, if you deal with buyers, you have those solutions. You can send invoices with payment links in them, so that they just have to click and pay rather than enter the bank details and everything.
Okay.
So it is a brave new world out there.
I have a request, and we're going to do this, Florence, for a webinar on finances, taking this a bit further. to clarify terms such as turnover, gross margin, gross profit, net income, net margins, ratios, etc. Now, I think that would be really useful. I was today delighted, and I was testing the ground with everyone because I thought, you know, would the audience be bored? Would it be hitting the right tone? But I think we've got it really, really nailed there. And I think your delivery is very interesting and it's very practical. So I'd like to commend you on that. And everyone has been very praising of today. And I think with that we will call it a day, and we'll be back with how to run our finances part 2. Yeah.
Yes,
and we've got loads of thank yous to you. So I'd like to thank everybody for being with us today, for seeing this right through to the end of the session. But I think part of that was how good you were, Florence. So thanks everyone, and we will talk soon. Thank you
for joining.
Bye. Bye.
Thank you.